How to consistently grow a small account. My name is Don Kaufman, and you are watching a TheoTrade presentation. We have a risk disclosure. Yes, we have to get the formalities out of the way here. Risk disclosure, we're not financial advisors nor a broker-dealer. The reason we throw that up there, I did spend quite some time inside of the brokerage industry, which I'll mention here momentarily. I love this one on the bottom, too. No soliciting, no recording, no photography. They should put in here, don't feed the monkeys, too. All right. Next one, copyright disclaimer. This is ours, not yours. The other thing on here, and the real reason we throw this up here, if you ever need to get a hold of me or anybody here at TheoTrade after this evening, one thing it's really important to us, okay, that you know, number one, we're based in Scottsdale. Number two, right there, that is a common inbox. If you ever need to get a hold of me, just put in the heading, Don. So if you put Don in there, that'll get to me. So support at TheoTrade.com. We use a common inbox because we do receive thousands and thousands of emails. So by all means, shoot us an email from time to time. It's one of the best ways to get a hold of us, especially now since we do have everybody kind of dislocated, working predominantly from the solitude of their home. Let's just jump into it. Listen, this is why you're here. In tonight's presentation, and by the end of the webcast, and one thing I just stress all the time, if you're here tonight, I want you to be able to walk away with something tangible, something solid, okay? That's the only reason for being here. So a skill set that you can apply, okay, or portions of a skill set that you can apply immediately. First thing that we're going to talk about tonight, why in traders, okay, and investors alike. And again, I'll detail a little bit about traders, a little bit about investors, but why they both outright fail with a lot of the strategies that they embark upon. We're actually going to talk about some fail points inside of the broader marketplace. And the reason I go through that, there's a lot of misconceptions about what this business really is. Number two, why you need to be cutting risk. You got to cut risk in order to produce consistent 55% returns surrounding high probability movements in any stock, ETF, or index. Okay, I will talk extensively about slashing risk. It's essential to produce consistency. Number three, learn how to grow an account with degrees of consistency, even in a world filled with volatility, especially right now. Number four, how you can trade without having to continually monitor the positions. We're actually going to use a couple of set and forget order types with a very high probability strategy. So again, we're going to go through, strategy in detail. Prior to that, though, we're actually going to give you a little background on overall, trade logic. So let's get into it. One also thing I like to offer for those of you that do tune in to the entire webcast, our gift to you. It's free. And we do this because we want you to obviously stay tuned to the end of the webcast. Tonight, we're actually going to give you the auto expected move indicator. It's $497 value. Hands down, it's the most single, advanced indicator ever coded, for the platform. And the indicator has literally changed the way that we view the markets. And I'm going to talk about the indicator a little bit throughout the course of the evening. But right at the end of the webcast this evening, we're going to provide you a link specifically to this indicator. It's completely free. Again, it's the auto expected move indicator. In fact, I'm actually going to show you a shot of it right now. Okay, the auto expected move, what it does is in this particular case, and I'll kind of detail this, this happens to be the spiders. Okay, and what it's doing is it's actually showing you ranges, on a week-to-week basis. And the auto expected move, these ranges are derived from an options chain. And not everybody in here necessarily, trades options, and that's neither here nor there. But the options market depicts risk moving forward. And this screenshot was actually taken earlier today. And I want to show you it because it's such a critical screenshot. Basically, what it says is we crack the upper edge of what's termed the expected move. When we crack the upper edge of the expected move, the probability of us pulling back in is greatly increased. What the expected move is, it's a standard deviation curve applied to the marketplace every single week. And it actually shows you, if the marketplace, like here, we're outside the expected move, it pulls back in. We're outside the expected move, it pulls back in. And people, it goes on and on and on and on. It's a probability-based indicator. It is not backward-looking, doesn't use any back data. It uses all forward-based and future option pricing. Again, it is the most complex indicator ever coded for this particular platform. And we will provide that to you, and a link to that right at the end. Again, I think it's spectacular. You guys are going to love it. Again, it's normally $500. We'll give it to you tonight. Stay with me right to the end of the webcast. Moving on. Housekeeping. Listen, tonight, as I start to dive into the skill set, I'd focus on it. I will go through this rather quickly, and I think you need to pay attention to the following course material to pick up on most of it. I say shut the door, turn off Skype, chat, Facebook, put your phones on silent mode, kick kids out, grandkids, and the dog can stay. I just say this. Listen, you took the time to be here. It's important. And this is critically important. So really, I suggest focus on being here. Again, I'm going to fly through a lot, and I'm not intentionally going fast. We just have a tremendous amount of material. And if you're brand new to this tonight, and I like to throw this out here right now. If you're brand new to this, I want you to be able to grasp big, broad strokes, understand big pieces of logic. If you're a little bit more experienced, okay, then you can get down into the weeds a little bit with me. And I'm going to try to tailor this to both sides of that. So some people in here have quite a bit of trading experience. Others of you just quarantined at home. You opened up an account and you're just firing off positions without a clue. And we're going to try to help you a lot. So this is a little bit about me. I watched order flow for the better part of 15 years. In large part, it's actually why I'm here. I have a very specialized skill set that maybe a handful of people in the entire world have ever had. And I'll give you a little background on me and explain what some of that skill set that I have happens to be. So I actually grew up around traders. I had an uncle that traded in the business in the 1970s. My uncle Mike actually started with one seat in the mid-70s. By 83, he had over 500 seats on exchanges worldwide. So they started a trading firm in Chicago. It was called O'Connor and Associates. So I kind of grew up around it. I knew a little bit about it. Anyway, I did a degree. My degree happened to be in molecular genetics. 3 weeks out of school, I was like, I'm not going to med school. I ended up trading on the floor of the Chicago Board Options Exchange, moved upstairs as a risk manager. About 2 years after I started trading in Chicago, I knew a couple of people from a pit on the floor. Specifically, it was the OEX pit, and they invited me to start working for them. So I went to work for a no-name brokerage firm in 2001. That no-name brokerage firm was Thinkorswim. And what I did for Thinkorswim is I actually built an entire education division for them. And I went on to take the company public in 2007. I was on the executive team for them, 2007. In 2009, TD Ameritrade actually bought us for over $600 million. I then went on to run education for TD Ameritrade and their 7 million clients. So again, in that time, I had access to the largest retail order flow in the entire industry. And for those of you that have no idea what order flow is, okay, order flow. I had access to everything that you did. I got to see 7 million accounts, big data. And by the way, when I say I got to see your accounts, you're like, that's not very nice. You looked at my account. We used big data. Like if you traded a certain strategy, we could fish out that strategy and we could tell you if you're making money, losing money. So we studied trades. We know what worked, what doesn't work. Okay. And a lot of what you learn here tonight obviously comes from my own trading experience, comes from the fact that I actually grew up around trading, worked for a trading firm. But some of the best knowledge that you're going to get here tonight, it actually comes, okay, from watching where people spend billions of dollars in mistakes and the knowledge of what works best for retail traders. This is not about market making. I made markets. Making markets has nothing to do with what you're doing right now. And I'm going to give you the knowledge of what works best for retail traders. So that's a little bit about me. I still do a couple of TV appearances every now and again. This is actually TD Ameritrade TV. It's back last summer. That was actually in studio. I've done the CNBC tour a couple of times over the years. This is the most memorable because they pitted myself against none other than the shark himself, Kevin O'Leary, and it was all about Apple. I was the short, he was the long. It actually worked out rather well for me. It was a time when Apple traded from $135 down all the way back to about $89. So it worked out very nicely. With that, that's my formal introduction. Let's get to it. Volatility. A lot of people are really worried right now. okay? And volatility, it's got them down. It should not, okay? This is it. You know, I have to stress this again. This is the time, okay? Volatility, the best opportunity you're ever going to get. Now, maybe you have to be a little patient, okay? But this is it, people. Volatility is your opportunity. And I like to start off, tonight's presentation, what's possible in the extreme, okay? What's possible, and more importantly, what's reasonable inside of the extreme. And I just wanted to show you this. This is a run that I went on. If you've never seen this before, what I'm showing you here is a 5-day net liquidating value. This is from, a platform called Thinkorswim. And Thinkorswim is where I originally worked. And what it does is it actually shows you individual dates. It looks backwards because, again, it's T-minus, right? So this is a run that I went on from $211,000 account to $248,000, okay? That is literally in a 5-day window. That's a 5-day net liquidating value, okay? Then I show you the precise same account. By the way, this account is an IRA, okay? This is a retirement account. This account then in March, precisely about a month later, okay? This is the exact same account, up to about $308,000 in change. But if you want to know what's possible and what's plausible and what's reasonable, okay, in the retail world, this is it. And that's actually a decent run. Here's a separate account, and I'm going to detail that in a very separate account, okay? And this is just a recent week that I went through. Again, what's plausible? This is a separate account. By the way, this is like a Saturday, a Sunday. This must be like that might be a Friday, a Saturday, a Sunday. Okay, Monday, Tuesday in here. That's a 5-day net liquidating value. It's up to about $714,000. By the way, everything that I show you, okay, in terms of trades today, every trade that I do is live. Every trade I do, okay, is monitored, of course, by our clientele here at TheoTrade. And again, I have a variety of different accounts. I move upwards, of about $1 million. That's typically what I have in the trading accounts. But again, I show everything. When I say I show everything, here, this is a screenshot from today. So what could be more reasonable than just showing you a screenshot from today? And today, my P&L is not exactly spectacular. By the way, over here, this is actually called the Monitor tab in Thinkorswim. This is my activity and positions. Okay, not a lot of activity today. I'm going to tell you right now. It was a day that was flat until the very end of the day. We sold off. But what I wanted to show you is what's reasonable for P&L. Okay, right down below over here, that is my net P&L of the day. It's $2,163, of which, and again, as I told you a moment ago, I'm actually moving close to $1 million. I only have right now, I'm grossly underallocated, about $81,761.84. That, people, is actually my margin requirement. That is my net margin requirement in the account. So I turned today about $2,000 off of about $80,000 tied up in margin. Because people want reasonable numbers, I'm going to give you reasonable numbers. The other thing is, what kind of trades did I use to go on that big run? Trades like this. This is an IWM back spread. Okay, I want to get you guys familiar with this format because you're going to see it a little bit later tonight. Every one of these trades is live. Okay, this was April 24th. April 29th, this is a back spread just for a period of course, 5 days. I put it on for a 43-cent credit. I took it off for a $4.97 credit. That means, for the most part, I collected $43 up front, closed the trade, for close to $500. Of course, you could add zeros to this. That could be, $430 to be able to make approximately $5,000. So that's an IWM back ratio spread that I had on. Now, again, I want to get you familiar with this because in the green here is the opening, in the red is the closing. Okay, you can see the exact date and time. I'm on Pacific time right now out here in Arizona. IWM is the symbol, gives you the exact expiration. Everything is included, of course, in these trades. But our members are saying this is actually the IWM trade. And again, you can see the IWM trade. I closed out at $4.97, variety of different prices. Jim was out at IWM at $2.02. All right. Phil V closed IWM yesterday at $4.38. Judd closed it over here for, he put it on for 43-cent credit, closed it at $2.13. Corky got out early at $1.93. Len Yu sold IWM on the 28th for $2.28 credit. The reason I'm actually detailing this a little bit is these trades are presented live. Okay. And when I say live, like these trades are actually presented in front of TheoTrade clientele. So again, here's another trade. This is actually the bigger run. Okay, when I say the bigger run, this is actually a run that I went on that produced a lot of that, about $100,000 of P&L. This trade was actually done. Again, this trade was done inside of an IRA. Okay, so it's inside of an IRA. This is a XHB risk twist spread. This is part of an infinity spread. I put it on for a 53-cent debit. Closed it for a 362 credit. Every $53 I invested, I got back $362. It's a 583% return. But these were the strategies that ultimately produced a lot of the gains. By the way, you don't have to do $53. You could do $530 to produce $3,620. Okay. And again, I wanted to start with this a little bit tonight to show you that volatility. Okay. This is the time, people. This is an XLU risk twist spread. Again, it's part of an infinity spread. This is one of the single largest trades I've ever had out of a risk twist spread. Every $96 I invested, I got back $1,272. It's a 1,225% return on capital. Again, this could be $960 to produce $12,720. Still a 1,225% return on that. And this is another IWM back spread. Okay, back in the late March time frame, put on for a 20-cent credit, took it off literally 3 days later for a $6.48 credit. Moving on from there, GDX, fantastic trend day, made 50%. Trader Vic, wow, thank you, TheoTrade, just closed my position for a $30,000 profit. Greg got out of Lulu Butterfly for 137% return. Listen, what I wanted to get to is, okay, we're going to go through, and we are going through an incredibly difficult time. But the point of me showing you a couple of trades, like you got to cut through all the chaos and realize volatility it's not just good, it's phenomenal. I mean, when I say this is it, I'm going to actually show you now why this is it. Okay. And when I say why this is it, this is something that, most people would never look at. You would never think to look at this. When I say that this is it, okay, this happens to be just a quick screenshot, okay, of TD Ameritrade. That's TD Ameritrade Holding Corporation. And what you're looking at here is February, March, April. Okay, this is the average number of trades they're doing in a day. By the way, this is in millions. So they were doing back in February. This is before, the crash of the marketplace. They were doing maybe 1.8 million trades in March when things were rocking. They're almost up to 3 million trades. April, we're over 3 million trades now a day. The numbers are phenomenal. When I say this is it, the number of trades are absolutely exploding because those that actually understand this business recognize that the volatility, okay, is the greatest thing that could effectively happen to you. Okay, so again, I stress to you, this is the time. Okay, with that, okay, we're going to talk a little bit about risk. As I said, your money's on the line. How you handle your risk is directly correlated to your success inside of the marketplace. Too much risk, you're going to panic. You're going to close positions continuously at the worst possible times. Okay, but people are incredibly consistent. Okay, with their panic. The reason I'm throwing this out here is before we dive head on into different strategies and so forth, we're going to talk a little bit about risk. We're going to talk about risk control. We're going to talk a little bit about trade logic. But the bottom line with this is, listen, I've looked at hundreds of thousands of accounts, big data. We figured out what works, what doesn't. Okay. And what doesn't just gets repeated over and over and over again. And it's alarming. Here's what works. Follow a system that has been sourced from hundreds of thousands of people like you. Okay. Again, I know that, I came from the market making side of this business, and I can't stress to you enough because I think a lot of people rest on that. They're like, oh, it's the market making side of the business. And I worked on the floor. That has nothing to do with the business that you're in right now. Okay. That's one of the bottom lines that I have to get to, to cut through all of that. What works for you is going to be vastly different, than what market makers do. Listen, you got to learn to cut losses and to use repeatable strategy to obtain incremental returns. Okay, successful trading strategies are going to exemplify the following principles that I'm about to show you. Okay, and that's what we're actually going to get into and start off tonight. It's principles, okay, of building a trade. All right, principles of building a trade. We're going to start with trade logic. We're going to look at capital allocation. Then we're going to look at directional bias. right? And you're looking at these, you're like, what do those happen to be? Okay, what are those factors in here? Trade logic and capital allocation and directional bias, and what does this really amount to? One of the things that we found over a lot of years, okay, in terms of trading and trading strategies, as I said, here's what works. Successful trading strategies have the following principles over here, okay? So I stress this to you as we go through this, and you look at this and you're going to think like, wait, does this make sense? First of all, let's explain what trade logic, capital allocation, and directional bias happen to be. So when we say trade logic, place strategy and trade logic first. Listen, we talk about, people involved in the market. And when you guys first get involved in the market, what's one of the first things you're taught? Turn on CNBC, you're bombarded with it. What do you think the stock is going to do? What do you think the stock is going to do? Where are we going to head? Are we going to head up? We're going to head down? Okay. What we're going to tell you is you have to use the right strategy coupled with established entry and exit criteria. You don't necessarily need to be right in picking direction in the stock or the markets, okay, in order to be profitable. Now, when I come into trade logic, and I stress this to you, when I come into trade logic, the point that I want to make with trade logic is simply this. If you look at these large trading firms, and I want to detail this because it's so critically important to your deeper understanding of this business. You look at a large trading firm, or you have one of these hedge fund managers and they come out of the blue and they go, yeah, we're really bullish on Apple. Okay. That is not their strategy. They don't just go out there and they go, I'm going to buy me some Apple. They're possibly buying Apple, selling some options against it, do a little dance, make a little love, get down tonight. The bottom line of that, though, is that you're missing the bigger picture. They were asked to come on to CNBC to give their take on Apple. They might be bullish on Apple, and that's fine, but that is not their trade logic, okay? And what runs those hedge funds, what runs big money is all about trade logic. And I can't stress to you this enough. I personally don't do CNBC very often, okay, anymore, because CNBC actually tells us what we're going to do and that we can only talk about directional bias on there. It's frustrating at that point. So we're going to talk in detail here about trade logic. The next thing we're going to talk about is capital allocation. What this means is how and where you allocate capital should be strongly considered, okay, as a viable portion of your trading methodology. Okay, capital allocation takes precedence over being right in the markets. And you're like, wait, what? Then we come to capital allocation, and it's how you're actually going to allocate your capital. So I stress this enough, and this is a weird thing to talk about because when I say capital allocation, listen, you guys ever been stopped out? You ever been stopped out of a trade? And then right after you get stopped out, the marketplace turns around, okay? And you're like, oh, I got stopped out at the worst possible price, the worst possible time. That actually deals heavily with capital allocation. It was not your inability to pick direction in the marketplace. You ended up being right. You just got stopped out a little bit early. Anybody ever been there? Okay. Excellent. Okay. Finally, become directional bias. And what directional bias is, it's charts, right? Listen, I'm not here to be anti-charts. I just recognize where you think a stock might go. The market's not always going to agree with those sentiments. Okay. Listen, being right directionally, it cannot define you as an investor. It cannot define you as a trader. For you may not be right often enough, especially in this market volatility. Okay. And the reason this is like a dog that's like, heard a new noise. You're like, wait, what? Okay. You can't bank on being right all the time. And if you are, you're missing the bigger picture, okay, of this particular business. Duration over direction. How and where you allocate capital cannot define only losses, but it can be the defining factor in your overall success or failure in the markets. So as crazy as that sounds, like capital allocation is so critically important. You don't get that right? That's it. You're done. You overallocate, you get stopped out of a trade. It's hideous. Our war cry is always duration over direction. You need to be capable of sustaining trades long enough to be profitable. And you're going to see that a little bit tonight. And I say, you want to be right or you want to be happy. I think my wife definitely reminds me of that phrase. And, I probably have not applied it to my marriage, but the logic works beautifully in trade. I'll always take that stance. You do not have to be right to be able to make money in this business. Okay. Why? This experience in watching order flow for decades has taught us some invaluable lessons. And this is where I was actually kind of harping at a minute ago, though. You ever been stopped out of a trade, bailed out of a position, only to see the markets turn around shortly thereafter? Again, it's not about your lack of ability. That's what I always stress to people. Like, you looked at your MACD, you looked at your Fibonacci, you looked at your Bollinger Band, you were spot on. Then what happened? Why did you get stopped out? Because most people don't understand, okay, that trading is about strategy, it's about trade logic, it's about allocation. Okay, the bias part, you think we're going up or down, is actually tertiary, which is it's down the low, it's down the line over there. And I'll always stress that to you. And it's such a critical portion of your understanding of this. So right here, right now, I'm going to introduce you to a real world strategy you can start using tomorrow. Very, very risk averse. Okay. But first, as we actually lean into this strategy, we're going to talk a little bit about risk versus reward. And this is what I wanted to harp on about trade logic and getting trade logic, right in this business is, listen, when we first learn about markets and trading for that matter, we're often exposed to very straightforward ideas, which is okay. Like one of those happens to be risk versus reward. And this is what I'm going to provide to you right now is one of the first examples that was ever provided to me in this business. And I'm going to take you through it. And something that has stuck with me. Literally, I started trading in 1998. Here we are 22 years later, and I'm still using the exact same example that was actually taught to me. And I think it's critical, and you guys that you guys understand that. All right. With that, so let's jump into it. Okay, risk one to be able to make two. Okay, it's a It's a common strategic entrance to the marketplace, right? So you go out there. How many people have ever done that before? When I say risk one to be able to make two, come on, people admitting it's the first step today, because this is a great, it's kind of the stomping grounds of where you need to go with this, right? Risk one to make two. Risk one to make two. Oh, come on. Only one or two people are willing to actually admit that they've actually looked at that and said, I'm going to go out there and risk a buck to be able to make two. Gone out there, put a stop order in there. Huh? Anybody? All right. I mean, this is what we're initially often taught in here. But if you look at the probability of success of this idea. So simple idea, but if you actually broken down, okay, some of the math behind it. And that's exactly what I'm going to get to. So we're going to come in here right now, and I'm actually going to draw this example a little bit better for you. Okay, we're going to debunk a lot about risk versus reward. We're going to take a following example. We're going to go out there and we're going to buy a stock. So we're going to go out there and we're going to buy a stock, and we're going to buy stock. By the way, every example I do, it's not stock, it's stock, right? And we're going to buy it right smack at $77. Okay, we're going to buy a stock at 77 bucks. Then we're going to set a stop. Right there, set my stop order. Okay, stop. Never forget this, stop. It's a 4-letter word. We're going to set the stop at 76, okay? And then we're going to put a target. Okay? And my pen's getting crazy. Target right at what? $79, okay? So what do we have over here? Well, if we're wrong, we're going to lose about a buck. And if we're right, we're going to make about $2. Is that reasonable? Okay. Everybody seen this before? Yes. Okay. Because I think this is a great place to start. Now, by the way, I promise, okay, this example, it seems so mild, so simple. Yeah, we're about to take it up a couple of notches over here. So hold on there, cowboy, because we're going to throw you in the deep end of the pool. So you're going out there and you're risking one, okay, to effectively make two. Great. How's it look? When I say how does it look, okay, is it going to work? Is it going to work? You're like, well, I looked at my MACD, my Fibonacci. This is the prototypical risk one to be able to make two scenario. But let me actually position the question a little bit differently. All right. So you bought that stock right there at 77. You had the stop order in here at 76, and the target is right on the head of that thing, okay, at 79, right? That's kind of your out price. But if you looked at the probability, okay, look at this as a probability equation. Don't look at it as whatever you think, because this is where people go, I looked at the chart. I looked at the chart and the Fibonacci. Okay, it was at a 618, and then there was a MACD, and then there was a stochastic, and it had to do it. Okay, what's the probability in here? And by the way, throw out some numbers. It's okay. Okay, what's the probability of going down $1 versus up 2? Okay, like what's the probability in here? What's more likely to happen? Go down a buck in a normal volatility fluctuation. What's more likely to happen? Go down a buck or up 2? Okay, anybody? Because this is exactly what we're going to detail. Because what you're going to find out is this probabilities, all right, they're not good. They're not good at all. And by the way, this could even be for one day. When I say this is one day, this doesn't even, maybe this is a day trade. Maybe this is something that you're holding overnight, over 3-4 days, okay? The bottom line is the probability of moving $1 of this stock is drastically higher than the probability of it moving $2, okay? Options are probabilities. Now, I'm not here to shove options into everybody's world. I said the O word. I talk about options. And again, I'm not here necessarily to make sure that you have to trade options, but I am here to tell you this. Maybe you never looked at options. Maybe you never even traded an options market. By the way, how many people here have never traded an option? Never traded an option. Okay? If you've never traded an option, put I've never done it, or just a Y inside of the chat, because I'm curious. How many people here have done that? All right? So never. Good. All right? Excellent. Okay? Won some, lost more. So you've traded a couple. You've never. All right. I'm going to use the options market a little bit of a different way. Okay? Options, they're all based on probabilities. And options can actually help us in determining the viability and practicality of really any given strategy. When I talk about practicality, all right, what's practicality of a strategy? I don't know. Is the strategy going to work? If I did the strategy once, that's one thing. But if I did the strategy, time after time after time after time, it has to stand the sniff test. Okay? Well, how? Why? Okay? Well, let us look at what the probabilities are in the aforementioned risk 1 to be able to make 2 trade setup and see if it's viable over the duration. So what I'm going to do is I'm going to take this precise idea where you have a $77 stock, and we're going to see the stop order set at 76 and the target price here, okay, up at what? Okay, 79, and we're going to see, what can we do? All right, nobody freak out, because there's a lot going on, okay, on this particular page, okay? A lot going on. All right. Here we go. So with this, I'm going to explain it in detail. The setup that I just gave you, okay, isn't a setup at all. It's live. It's a Starbucks trade. So the example I gave you is $77 stock. Well, that $77 stock happens to have a name. Okay, that $77 stock happens to be none other than Starbucks, and Starbucks is trading literally at 77 bucks. So I took this screenshot literally today. So what I wanted to do is, if you bought the stock at $77, I wanted to look, and in this case, it's the next 3 days. Is that okay? Because a lot of people are day trading. Maybe you're going out there, firing off a trade over here and there. But I wanted to show you what's called probability of touching. Okay. What probability of touching is probability of touching. And again, this relates to options. You do not ever have to trade an option, but to understand probability of touching can give you the practicality of any given strategy. What probability of touching means, it's the probability anytime in the next 3 days of touching or exceeding a particular level. Okay. Anytime in the next, again, 3 days of touching or exceeding a particular level. In this particular case, I put up 76. Why? Because remember our strategy. We went out, okay? We bought the stock right at 77, okay? And we set a stop, okay, at 76. So what's the probability of getting to 76? In the next 3 days, again, there it is, in the next 3 days, there's a 73% probability, okay? Then we have that target. Right? Target set dead on 79. What's the probability of getting to 79? 45%. How does that grab you? Okay. By the way, people always ask, are these probabilities, are these things good? Okay. Anybody? Okay. That's one of the things that, we constantly talk about in here is, are those good? The probability is good. Yeah, absolutely. Okay. I mean, it's the law of large numbers in here. Those probability calculations on here, so few people, and I stress this again and again and again and again, so few people, okay, are aware that these probability calculations, this happens to be the Thinkorswim platform, but these are on E-Trade, They're on Thinkorswim. Okay, they're on pretty much every major trading application right now. But so few people know how to use what's called probability of touching. All it basically says is, listen, if you go out and you do this strategy and you put a stop order, okay, you're going to have about a 73% probability of getting what? Okay, getting stopped out. And I'm going to detail just that. So risk versus reward revealed. In the aforementioned Starbucks example, okay, the probability of hitting the stop of 76 is 73%. The probability of hitting the target price of 79 is 45%. What happens to most people in a strategy like this is it's actually a slow bleed. They'll lose money, lose money, make it big. Make it big, lose, okay? And you actually get bled to death, just like at a casino. And I'm telling you right now, the risk one to be able to make two scenario is a setup for a low probability disaster. And most people are not aware that this occurs. And they're not aware that if you set stop orders, the probability of getting stopped out in a risk one to be able to make two scenario is incredibly high. And the reason that I wanted to detail this is because this is your first introduction to trade logic. Does that make sense with everybody? Okay. We okay so far? All right. This is a good stopping point. It's a good stopping point. Breathe. Make sure you're okay. All right. Make sure you're okay. Yeah. Huh? Anybody? All right. Because this is the time. I'm reading for questions and so forth. All right. With that, all good. Okay. We got the all good over here. All right. And it is an interesting concept. Now we're going to take it a step further. Okay. What I'm telling you right now, you can't do this. Because if you do this is the first example that was ever taught to me. And this was actually taught to me on the market making side of the business. They basically said, people don't understand basic logic, basic principles of logic in this business. This business is a little bit about math. You don't have to be a math geek, but okay, you can't overcome a 73% chance of getting stopped out. It's going to bleed you to death. And that'll happen in 3 days. It'll happen in 30 days. It'll happen in 300 days. Okay. You set stops like that. You know what? The thing about stops is they work. So what do we have to do? We have to position your portfolio with the right trade logic. And that's exactly what we're going to do. Let's get down and dirty. How do you position yourself? Okay. How do you position yourself most effectively without exposing yourself to drastic risks and or a low probability? So what we're going to do is we're actually going to detail a strategy right now. Okay. And I think everybody would probably be interested in this, but number one, we have to overcome the high probability being stopped out. We got to nix the stops completely. Number two, we have to be able to define your risk because right now we're in a volatile marketplace. And if you don't believe that, okay, you haven't seen anything. Maybe the last couple of weeks, the markets have just channeled up and down. But get ready again, people. We're going to go back to Mr. Toad's wild ride. Number three, provides a high probability of success. Number four, limits capital exposure. Okay. Defining your risk and limiting capital exposure are two different animals. This, you have to actually figure out how much capital do you want exposure to. Okay. How much capital? And we can come in there and we can actually fine tune the exact capital exposure you're comfortable with. And number five, you're never going to need, in any case, to go out there and buy, sell stock. And that is where we're going to discuss a little bit about options. You're not going to necessarily have to buy or sell the stock. And don't freak out. Don't freak out on me because we're going to go through this. And right now I'm going to get into a strategy that exemplifies, each of these five, critical aspects of this business. Enter the in-out spread. In-out spreads, they're designed to limit exposure, maximize potential with minimal movement in the underlying. Yeah, in-out spreads, they're options trades. I said the O word again. Can we learn a little bit about options? Can we learn about options? And again, those of you that are opposed to it, because there's always one in a crowd. If you're opposed to learning about options, that's okay. Still stay tuned in because I'm telling you, it's going to blow your mind what you can do with such minimal amounts of risk, especially in this marketplace. And I stress to you because there's some people that they say to themselves at this point, I don't want to learn anything. Okay. This isn't the business for you. Okay. Fear not the options, as option spreads allow us to limit our risks without the use of stop orders while providing considerable upside potential. And I constantly stress that, right? We're going to go in there and we're just going to fine tune this. I'm actually going to give you an in-out spread right now. So if you're brand new to options, grab the big concepts, right? Just understand big grapefruit concepts. For those of you that do trade options right now, Okay, you're the ones that are actually going to go out there and you're probably going to grab a little bit more of the finite details. So we're going to go out there and we're going to have a stock. And again, we'll use the example of stock. And it's trading right at 200. So it's trading at 200. Now, are we going to own the stock? No. Are we going to buy the stock? No. Are we going to short the stock? No. What are we going to do with the stock? Nothing. What are we going to do? We're going to trade some options. Okay. I'm going to come in here and I'm just going to give you, let's just do an off-the-cuff example. Okay, I'm going to go out there and I'm going to buy a 199 call. I'm going to buy a 199 call, and it's going to cost me $3. Now, some of you have no idea what a 199 call is. Great, let's get there. What's a 199 call? First of all, options. Options are contracts. Okay, do you know what a 199 call is? It's a contract. To do what? To buy the stock. At what price? 199. So what's the 199 call do? Gives the right to buy the stock at 199. Do I have to buy the stock at 199? No, but I have the right to buy the stock at 199. How long is that right good for? Ooh, that's a good question. Let's make this one good for 1 month. Sound reasonable? For 1 month, I have the right to buy the stock at 199. So what happens if the stock goes to 210? Anybody? If the stock goes to 210? You have the right to buy the stock at 199. Everybody else in the world has to pay 210 for it. The 199 call is worth at least how much? You guys tell me. Anybody? Okay. If you have a 199 call, you have the right to buy the stock at 199. But if the stock runs all the way up here to 210, okay, you have the right to buy the stock at 199. Everybody else in the world has to pay 210 for it. So that 199 call is worth at least $11. And you go, but how am I going to get my $11? Well, if nobody in the world will give you $11, did you know that you have the 199 call? Now, that 199 call is going to be worth at least $11. But if nobody in the world would give you $11, you have the right to buy the stock at 199. And the stock right now is trading at 210. So if you bought the stock at 199 and sold it at 210, you would get your $11 that way. But that is what options do. And I'll tell you what, you never have to buy or sell the stock. And that's why I wanted to detail this. Here's the downside. You got to pay $3 for it. So I'm going to put this down below. Okay. We're going to go out there and we're going to buy, in this case, a 199 call. And we got to pay $3 for it. Now, what's the bad part about $3? You got to pay $3. If the stock stays flat, you have the right to buy the stock at 199 and the stock's at 200. What good is that going to do you? You just paid $3 for it, and guess what? That's not going to work. What happens if the stock goes down? Oh, but still my heart, you were wrong, and the stock goes all the way down to $195. If the stock goes to $195, what's a 199 call worth with the stock at $195? It's worth squat, because nobody wants to go out and buy a stock at 199 when the stock is currently trading at 195. Does that make sense? Are we okay? Because that's part of the in-out spread. You know what the other part of the in-out spread happens to be? We're simultaneously, that means at the same time, going to sell, in this case, a 201 call. And it, people, is going to be trading for exactly $2. And I'm going to put that down here. So we bought one. We're going to sell another. We're going to sell a 201 call. And it's going to be trading for $2. And if you net that out, what are you going to do? You're going to pay $1 for this. Now, wait. Whoa. Slow down there, Don. You're buying a 199 call. And a 199 call gives you the right to buy the stock at 199. And I pay $3 for it. I simultaneously go out there and sell a 201 call. What's a 201 call? Well, if you sell a 201 call, it gives someone the right to take stock from you at 201. How do you sell something that you never ever owned? Yeah, that's one of the questions that comes up all the time. When I say I sell something, okay, I'm selling something here that I never owned. Right. Options are contracts. Options can give you rights. I have a right to buy the stock at 199. And options can give you obligations. I'm obligated to give somebody my stock at 201. Now think about this. You have a right to buy the stock at 199, but you're obligated to give somebody that stock at 201. Now, do I own the stock? Absolutely not. Okay? Absolutely not. All I want to do right now is focus on this. So if you have the right to buy the stock at 199, but you're forced to give somebody else your stock at 201, what's the most you can possibly make on this trade? What's the most you can possibly make? This, people, is what we call a $2, okay, wide spread. The most you could possibly make on a $2 wide spread is $2. Do you see it? Okay, because you have the right to buy the stock at $199. Somebody can take stock from you at $201. Now, what can happen to you in this trade? Let's look at the odds and ends of it. What can happen to you in here? What can happen to a stock? So here's the stock, and the stock is trading at 200. Let me ask again. Do you own the stock? You go, no, I do not own the stock. What do you have? Well, you have the right to buy the stock at $199, and somebody has the right to take stock from you at $201. So let's go through some scenarios. Forget what you paid for it. Forget what you paid for it right now. Let's go through scenarios. Let's say the stock goes down. Let's say the stock goes up. Let's say the stock goes all the way down to 190. Let's say the stock goes all the way up to 210. If the stock goes down to 190, what's the most you could possibly lose? Well, what did I pay for the strategy? If the stock goes down to 190 inside of the next month, I can lose $1. I can lose $1. All right? But what happens if the stock goes skyrocketing to 210? What's the most I can possibly make? Well, how much can I make on this? Well, I buy the stock at $199. Somebody takes my stock from me at $201. What do I make on the strategy? I make $2, of which I paid $1 up front. So what am I really doing in here? What am I doing in here? And again, I almost want to change the color right now. Just see this. I am literally going out there, okay, and risking $1, okay, to make $1. Time out! I'm risking $1 to be able to make $1. How can Don make any money? This is the most ridiculous thing I've ever seen. How can you make money doing this? Do you see, okay, the logic of this yet? Most people don't get it the first time they see it. Even the most experienced people don't get it the first time they see it. So I am putting on a strategy where literally, okay, it's a $2 wide spread that I paid $1 for. The most I can possibly lose if the stock goes down all the way to 190, my risk is defined to $1. That's it. The most I can lose is $1. But if the stock goes soaring, even to 300, the most you can possibly make is $1. Why would anybody want to do the strategy? Okay? And this is what people don't see. And we're going to detail this, okay, very, very precisely. This strategy is set in motion for 1 month. What can happen to you over the course of a month? Do I have any stop orders in here? Absolutely, unequivocally, no. What'll happen is here. We start with the stock right at 200. The moment you put the strategy on, the market starts to sell off. Let's say the market sells all the way off to 195. Okay. Am I done? Do I lose? Let me ask the question. Okay. You literally put this thing on, and 2 days after it's on, we're now trading at 95, 195. Am I done? Am I done? I think it's a viable question. Am I done? Am I done? Am I done? No. How am I done? How could I possibly be done? This strategy is good for a month. Okay? But I know that my maximum risk is $1. So if we go down to 195, what do? Absolutely unequivocally nothing. Because over the course of the next, I don't know, let's say 2 weeks, the market starts to rally back up. And the market rallies back up. I don't care. Maybe the market gets to 203. What am I? Gold, Jerry, gold! The bottom line with a risk one to be able to make one strategy is the probability of making the dollar far exceeds, okay, the probability of loss. I'm going to say that again. In this particular strategy, we become impervious to risk. The impervious to risk, you can still lose $1. And I'll tell you what, it's plausible that you can lose $1. And sometimes you will lose $1. But you have to understand that you've made yourself impervious to risk. You've made yourself impervious to the fact that the marketplace just traded against you. And this is where everybody talks about, is Apple going up? I don't know if Apple's going up. Is Apple going to go up? Is it going to go up? Is it going to go up? Maybe Apple backs off to 195 and then 3-4 days later rallies back up and eventually gets over the 201 level and it gets all the way to 203 where you're profitable and pull your dollar. How about you have a drastically higher probability of making $1 versus losing $1? And that, people, is why we use in-out spreads. It's about strategy. It's about trade logic, right? Let's continue, okay, with our Starbucks example. However, we're now going to use an in-out spread, okay, rather than the stock and stop orders. So rather than buying the stock at 77 and using, all kinds of stop orders, we're going to go out there and we're going to limit risks, okay, provide an extraordinarily high probability without the use of stops. Does that make sense to everybody? We good? Okay. By the way, that's me at an airport, Starbucks in hand, and that's just the Starbucks logo. Okay. I don't know. It seemed like the right time to throw the Starbucks in there with that Starbucks in-out spread. Okay. Now, what I took you through earlier was literally Starbucks. And then I took you through just a little bit of like an example, but I just wanted to take this once again. Let's actually do it literally in Starbucks. Now, do I own the stock? Absolutely not. I went out there and I buy a 76 call. Once again, what's the 76 call give me the right to do? Gives me the right to buy the stock at 76. I don't really want to buy the stock, but if I buy the stock at 76, that's actually going to cost me right now $3.50 debit. Ooh, I don't care who you are. $3.50 is going to hurt. So I offset the cost of this call by selling a 78 call. So I have the right to buy the stock at 76. Somebody has the right to take stock from me at 78. But because I sold the 78 call, and this is the part that everybody doesn't get, how can you sell a call that you never owned? You're selling yourself into an obligation. Think about that. You're selling yourself into an obligation. Options, you could buy them or sell them. When you buy an option, you have a right. But when you sell an option, you have an obligation. What's the obligation here? To give somebody stock at 78. But if somebody wants your stock at 78, you have the right to take stock from somebody else at 76. So what can you make in there? $2, of which you paid $1 up front. So once again, we're literally in a risk one, okay, to make one scenario. And that's where everybody goes, I don't like it. Okay, so here, $77, okay? This trade, let's say it's good for 1 month. By the way, you don't have to do it for 1 month. What's cool about these, you could actually do it for 3 months. You could even do it for 4 months. You know what? You would not. Options, everybody thinks that options cost more the more time you have. But when you're buying one option and selling another option, options do not cost more the more time you have. And that's one of the questions that people always ask. Do I do this for a month or 3 months or 4 months? I just want you to rationalize that sometimes you're going to be wrong. And this stock is not going to go from 77 straight up. The stock is going to go from 77, okay? And it's going to go all the way down to 73. And that's when you're going to be crying in your soup. But did you get stopped out? Of course not. You didn't get stopped out. Right now, you know what your risk is. Your risk is $1. So the stock goes down to 73, does a little dance, makes a little love, goes all the way back down to 72, and then turns around and it rips. It rips. We find out that like Starbucks, okay, reduces cancer risk. It's the greatest thing ever for you. And the stock flies all the way, let's call it to $80. It's plausible. It's plausible easily in the next 3 months, okay? So the stock gets all the way back up to 80. What am I? Gold, Jerry, gold. I'm out, and I'm out profitably. Again, the whole key to the strategy is in a risk one to be able to make one scenario. And I want to hammer that home to you. Risk one to make one, risk one to make one, risk one to make one. You can't risk one to make one and make money unless the probability of making the dollar, the probability, again, of making that dollar right there, the probability of that far exceeds the probability of the loss. And that's what's so critical about this particular strategy. Right? So remember that the probability of making the buck far exceeds the probability of the loss. And that's why a risk one to make one strategy is okay. Listen, this is why you want to use in-out spreads. First, and again, I said we had to hit on all of these key points. You have to have, okay, a trade that embodies these ideas. You have to overcome, okay, the high probability of being stopped out. You got to define your risk and limit that capital exposure. How do we define your risk? Well, we defined your risk by using a spread. We limited capital exposure by not even using stock, okay? We never had to buy or sell the stock. We provide a high probability of success. You can initially be what? Be wrong. Remember earlier when I was talking about those 3 principles? What was the first one? It was trade logic, right? So we had logic in here. Number 2, okay, was allocation. And the third one was your bias. Now do you understand what I'm getting at? Being wrong and still coming out ahead. By the way, all of this can be done inside of a retirement account. It can be done inside of an IRA. You need this in your life, and you really need it in your life right now. Now, don't freak out because I'm going to show you now, okay, the real strategy. When I say the real strategy, this is Starbucks. This is just a screenshot taken literally today. And in this screenshot, I just wanted to show you the option pricing, okay, for real. When I say for real, this is Starbucks. It was trading today right smack at 77. You have to understand how hard it is to get a screenshot. You're sitting there like, okay, take the screenshot right when it's trading at 77, and it ticked to half a penny. Starbucks is trading at 77. I go out and buy the 76 call. Look, everything on this side of the screen over here, these are your calls. I'm buying a 76 call. I'm selling a 78 call, right? I take it down below. It's one order. Buy the 76, sell the 78. Commissions these days are negligible. Max risk is $1. Now, options are traded in contracts, okay? And one contract is the equivalent of 100 shares. So one contract, you're not risking $1 in here. What you're risking is $100. Most people don't realize that you can get involved in this business. The commissions are negligible at this point. You know the commissions on that thing? Commissions on that thing are what? 65 cents plus 65 cents. Huh? What do you got? You got $1.30 in commissions? So I'm sorry, you don't have $100 at risk now. You have $100, okay, and $1.30 in commissions. That's it. That's it. I mean, that's how, okay, viable this stuff happens to be. And if you don't want to do one contract, you could do 10 contracts. And 10 contracts, okay, you'd have $1,000 at risk. You determine that. Again, you can actually fine tune this to anything you want it to be. But it's critical that we understand that we have a structure of a trade that can be definitively wrong and still come out okay. And this one I did for 24 days. I could do it for 3 months. I could do it for 4 months. I could do it for what? For 3 weeks, 3 days. Okay. Why are you out there with stock and stop orders? Right? It's literally going out to a marketplace. You just don't have the right tools. I mean, you're not even playing the same game. You've got to use spreads, especially in volatility. Now, okay, with that, in-out spreads. They'll also give you the power to trade absolutely massive stocks, index products, with mere pennies at risk. The next one I wanted to show you, I was thinking about doing an example like an Amazon. Amazon, it strikes fear into the hearts of all, okay? But in this case, I wanted to do Apple. And in this case, okay, I'm actually not bullish in Apple. The other strategies that I did, and I don't know if you guys realize this, okay? My example, bullish. The Starbucks example, bullish. Apple, okay, let's bear up, baby. Why am I bearing up in Apple? I don't know. It seemed like a good time. I'm actually going to show you that in a second here, okay? In this case, we're going to trade puts. We're going to buy a 320 put and sell a 315 put. There it is, okay? We're going to buy a 320 put and sell a 315 put. And that thing is being done for a $2.15 debit. Apple, that's no joke. It's a $317 product that you can trade for as little as $215 at risk. That's it. That's it. Plus transaction costs, but that's your maximum sustainable risk if you do one contract. You want to do 10 contracts, make it $2,150. You want to do 100, okay, and so forth and so on. You just keep adding zeros to your heart's content, okay? But the point being over here, right, is you can trade Apple, you can trade Amazon, you can trade Tesla, okay? All of the big players. You could trade the SPX. Do you know what the SPX is? It's the mother of all products. And when people look at this, they go, why are you so bearish in Apple? I didn't say I was bearish in Apple. I said expected move was bearish in Apple. Remember the indicator I talked about at the very beginning of the session? The very beginning of the session, I talked about how there was an auto expected move indicator. Okay, and then we're going to give you the auto expected move indicator right at the end of the presentation. So tonight, right at the end of this presentation, we're going to give you a link to this auto expected move indicator. The auto expected move indicator right now, okay, you're like, so why are you so bearish? Because we actually cracked the upper edge, okay, of the expected move. Guess what? I took the screenshot earlier in the day. You know what Apple did late in the day? Came off, and it came off big. Okay, came off big. Go look at the price right now of Apple. And you ask, why? Why short Apple? Okay, because the expected move told me to. But again, okay, the expected move, this is a very quantitative tool. This isn't about charts. It's not about MACDs and Fibonacci's. The options marketplace dictated, okay, whether I should be long or short. Sometimes listen to what the marketplace is telling you. Again, listen to what the marketplace is telling you out there. Now, want to see some real trades? So here's a couple live in-out trade examples. This is a QQQ in-out spread. And this is one that I opened February 6th, closed February 24th. Now, again, all I'm going to do in the next couple of moments, I'm just going to take you through, okay, a couple of weeks of spreads. Yeah, I'll start back in February, but I'll jump forward into recent times here momentarily. So every single trade that I'm showing you here, okay, was done live, meaning that these are not paper trades. Every one of the trades are live trades. You see the exact execution prices, okay? In this particular case, every single trade is going to be an in-out spread, the exact examples that we detailed. All right, this one is in the QQQ, which is the NASDAQ 100. In this case, every $80 I invested, I got back $139. It's a 74% return, okay? Again, for a couple of weeks, not half bad. It's an open position, okay? This is to open, to close. This is the exact debit and credit. I'm just getting you familiar with some of the structure. So, okay, I could do this one $800 to return, what, $1,390. All right, next. This next one is actually JP Morgan. So in JP Morgan, similar time frame, every what, $81 I invested, I got back $159. It's a 96% return. Okay, we'll keep just cruising on through here. So pushing forward, this is Amazon, the mother of all products. Now, the reason I wanted to show you Amazon, first of all, I opened and closed the trade in the exact same day. I opened this one predicated on that auto expected move indicator. I opened this one for a $2.25 debit. I closed it for a $3.07 credit. You can see I opened it very early in the trading day, and this one I closed very late in the trading day. So effectively, you have about 6 hours of trade. Every $225 I invested, I got back $370. It's a 36% return on that particular spread. Next, we move on to Costco. Now we're starting to get a little bit more recent. Here we are towards the end of March, right? Costco, I opened up for what? Well, March 17th, closed it on March 24th. Every $211 I invested, I got back $335. It's a 59% return. Okay, moving on. This is another Costco spread. By the way, literally Costco, okay, different spread, same underlying, different expiration cycles, right? They're different trades on the same exact product. It's fair game. Every $110 I invested, I got back $177. It's a 61% return. And I want to reiterate again, okay, this doesn't have to be $110. But people look at this and they go, I have a $200,000 account. Good. Okay, do $1,100 to return what? Okay, $1,770. Still a 60% return. Okay, scaling up is the easiest part of this. From Costco, and again, you can see the love affair, if you will, with Costco and multiple strategies on Costco. Next, you move over to Microsoft. In Microsoft, I opened it on March 19th, closed it on March 20th. Every $211 I invested, I got back $301. It's a 43% return. Okay, this is actually what a lot of our members are saying. Okay, every one of the trades that I've detailed thus far was done live in front of TheoTrade clientele. Just closed Microsoft 155 put for 265, bought it at 86 cents. Thanks. Okay, Microsoft bought at 93 cents, closed at $1.64. I just want to show you there's different pricing in here, man. I mean, come on, these are live markets. Okay, Microsoft out at 270, okay, in at 95 cents. Okay, out Microsoft, this one's a grand slam home run. This individual held it longer apparently than most of us did. 175% profit. Thanks, Don. This is again what our members are saying about these particular trades. Next on the docket, Boeing. Okay, Boeing has actually been a product that we've traded quite considerably. This is actually entering March 25th, exiting April 2nd. What I'm doing is taking you through now more and more recent trades inside of Boeing. Every $238 I invested, I got back $362. It's a 52% return, okay, on Boeing. Once again, in terms of Boeing, Alex said close Boeing 357 for 50-cent profit. Mary Ellen filled on Boeing. That's the the 145, 140, put debit spread for 363 credit, for the exit. And again, I want to show you, okay. That's exactly the strikes, of course, of this particular strategy. I got out for 362. Mary Ellen got out for 363. She actually beat me in this one. Just filled for 30% profit. This is Mark. Okay, made what? 55% on Boeing. Mariano out Boeing 364. Boeing 357. And again, okay, you're looking at different traders getting different fills, because that's the reality, of course, of this business. This one's a Visa in-out spread. Again, we're getting more recent. Opened on March 30th, closed on April 1st. Every $107 I invested, I got back $152, a 42% return. Intel, okay, again, getting more recent. Every $86 I invested, I got back 111. It's a 29% return. This one's actually just one day. And these little one-day trades, take what the defense gives you. XLE. This one I actually opened kind of mid-April and literally, again, closed it the next day. Every $87 I invested, I got back 120. It's a 38% return. Jeff was saying, this XLE was my first ever option trade in-out and filled. I'm officially 100% win rate. I love that one. Okay, there's no better thing to see somebody come in there for the very first trade. By the way, that was on April 15th. This gentleman actually chatted in. He closed it and was quite pleased because he literally signed up, I think, on April 13th, did his first trade on April 14th, was out profitably on April 15th. Okay, so this is just some of the comments. Malu closed it for $1.14, closed the XLE in-out spread for a 30% gain, in at 87 cents, out at $1.15. Those are pretty much the same exact numbers that I've got on my screen. With that, this is back to the QQQ. Again, getting more recent. Every $80 I invested, I got back 108. It's a 35% return. Again, this is only, 4 days? This is out of my second QQQ in out for 30%. Paul said, made good money on the QQQ trade. Thanks, Don. 30% QQQ in out spread. Mark S. closed the QQQ. And by the way, all of the dates are from the day that obviously we executed the position, which is April 21st. Tried really hard to get $1.06, but the market forced me into getting $1.08. Lots of laughter on here from YBR. All great fills. Next, the XLP. Again, as I said, we're getting more and more recent. The XLP, if you're unfamiliar with it, it's consumer staples. Okay, and in consumer staples, this is one that we only exited a few days ago. Every $87 I invested, I got back $134. It's a 54% return. Again, do however many contracts. If you want this to be $870 or $8,700, okay, to have a $13,400 return, that's completely up to you. Tailor the strategy and your allocation. Listen, what better time? Learn a new skill set to last a lifetime. Okay, when you're ever going to have time like this again? If you're still working, do this part-time. Most of us are actually working from home, including myself. If you're quarantined, by the way, technically I'm in Arizona. We're no longer quarantined. But if you are, this is how you're going to emerge stronger, okay, and in great financial shape. As I said, I'm not quarantined, but we're not exactly congregating in large portions here in Arizona. So as I say that to you, it's simply because you've got time right now. You're home. More people right now are trading than ever. That's why I threw those TD Ameritrade numbers at you, okay, about an hour ago. I threw those numbers at you about an hour ago because I wanted you to see everybody's trading, okay? But you've got to have the right trade logic to do this, all right? What our members are saying, Jamie G, plus 55% to start, okay, from working from home. This is JHS. Good morning, all. Another day. Work from home. Thank goodness for TheoTrade to keep me sane. Ken W. took 500% profit on Don's TLT back ratio spread. Too scared to stay on. Could have made it a 10-bagger. Paul, plus 24 on an ES move on the gravity. Okay, love them gravity points. Thanks so much, Don. Okay, where do I send my royalty check? Send it directly to me. By the way, that was just the other day inside a chat. We were chatting back and forth about gravity points in here. Listen, what you're seeing right now, this is not that time consuming. No time, no problem. All the trades that I've shown today, and I showed live trade after live trade, they're all displayed live at TheoTrade. What we do inside of our accounts, it's all capital. It's my IRA that I predominantly trade in. The trade results that we're showing are perfect for part-timers. In-out spreads, it's hands off, and it actually uses what we call set and forget order types. By the way, if you guys have never heard that term set and forget, maybe that's not the right terminology to use. The terminology is very simple. We're actually going to teach you to put the trades on, and then we're going to set GTC. That means good till canceled, to get you out at a very, very specific, exit. Okay, and we're going to do it based on a percentage. Even a fraction of your time is good enough to see results. And we text out trades, and we do push notification. You do not have to be glued to your screen. And a couple of characteristics of these in-out spreads. Listen, the attributes of the high probability in-out spread are undeniable. You don't have to buy or sell the stock. And that's one thing that I got to detail right now. In this business, you want to go out there and buy and sell a stock and set a stop order? I mean, really. It doesn't matter what stock. You're like, oh, just buy a Royal Caribbean. Yeah, it could go to zero. But if you use the in-out spread, you're going to define your risk. You know you want to take some shots out there. You know right now you want to take some shots. Now you've got a strategy to take a couple of those shots because you're going to define your risk. Risk is going to be limited to precisely your comfort level. You know you can fine-tune this, okay, to the exact dollar that you want at risk. Okay, you don't have to use a stop order. Again, the stop orders, they're going to kill you. You can vary the time frames and not pay more. The probability of the profit is high because you initially can be wrong and still make money. It's the perfect spread to reduce risk of a stock portfolio. You got to reduce your risk right now, and it's an excellent tool for those seeking, returns to build a smaller account. What you have to learn on this one, and this is the Starbucks strategy that we kind of detailed earlier, what you have to learn on this one is how to build the in-out spread. Listen, please do not let options intimidate you. This spread right down below over here is being done for a $1 debit. But the spread is akin to a massive power saw. And I was talking a little bit about options earlier, okay? And you're out in the marketplace right now and you're just trading stock. If you're just trading stock in this business, it's like literally tying your hands and feet, behind your back and trying to move forward. Okay, you're not going to do it. But you also have to recognize that options, they are a massive power tool in this business. Options will be the quickest, the fastest, the safest, the easiest way to get where you want to go in the business. But if you don't know how to use them, you're going to lop off a couple of fingers. It's just like going out there. What would you rather use, a handsaw or a power saw to build a house? And of course, you'd rather use a power saw. You know how many cuts you're going to have to make to build a house? Okay, but if you don't know how to use a power saw, you're going to lop off a couple of fingers. And the same is true, again, of options in this business. It's not going to take a tremendous amount, okay? You can do in-out spreads. I realize that you may not know options, or maybe you have limited experience in placing option trades. And again, do not let that portion of the business intimidate you, because you need, and I cannot stress that enough, okay? Whatever you're doing in this business, you need these strategies for the foreseeable market future. If you don't define your risk, okay, you're just out there in the breeze. It is only a matter of time before not only we hit a patch of volatility, okay, but you're going to see horror unfold. Let this marketplace keep baiting you in. Let the Fed constantly throw trillions at it. It's just more bait. Are you going to bite? And this is not about being bullish or bearish, because I'm going to tell you right now, you get your head taken off. This market could scream higher only to crash and burn a couple of days later. Listen, we can show you how and when to place in-out spreads. It's a matter of a few hours. TheoTrade, what we do here is we create detailed recipes for every strategy, including the in-out spreads. Listen, you would not bake a cake without a recipe. So why would you trade without one? And I often stress that, and I use this analogy all the time, is that, listen, what we do here at TheoTrade, we don't just give you an in-out spread and go, on your way, on your way. We give you criteria. And criteria is a recipe. It's like a pre-flight checklist. Let me actually show you what it is. This is what you really need, okay, to know to successfully enter and exit in-out spreads. You got to know what makes a viable in-out spread candidate. A moment ago, we were actually talking a little bit about this. When I say a viable in-out spread candidate, well, you saw Apple, and I talked about Amazon, and I talked a little bit about Tesla, but Tesla could be far too much volatility. Maybe I should do something like Walmart, but earnings came out on Walmart today, and then Home Depot had earnings too. Should I do it on a biotech stock and just bet everything on some vaccine that's not going to come to fruition? You're like, oh my. We'll give you viable candidates. How do we give you viable candidates? Well, we determine what volatility you should seek out. What if it told you the exact volatility we should seek out? That would probably help. But then you have to narrow down, what options expiration do I select? Now, this is a fun one. When I say what options expiration, a moment ago, I was kind of baiting you into this because I was like, well, you could do 1 month. You could do 2 months. You could do this thing 3 months out. You could do this thing 4 months out. But that's a whole lot of time. But 1 month is maybe not enough time. You could even do this for 3 days. There's weeklies out there. Should I do it in weeklies? How about we give you the precise options expiration to select? Okay? What should be the delta of the option that I buy? You're like, whoa, 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 what is delta? Delta, the rate of change of the option for every dollar increment move in the stock. Delta will actually tell you the precise delta of the option you buy. Will actually tell you the precise delta of the options to sell. You can't leave people hanging. You can't just, I'm not just going to show you a strategy and then go, you go ahead, you go into the market and do as you please. You have to have every nut and bolt behind this. Okay? You have to have specific entry criteria. Then more importantly, what do you do once you're in the trade? Okay? How do I build the trade? Some of you might know that, right? What's the right amount of risk for me? When I say the right amount of risk, if you have a $200,000 account, if you have a $100,000 account, okay, if you have a $2,000 account, how much capital do you put at risk, okay, for this given strategy? Okay? You must know this stuff. I mean, this is not guesswork. This has to be finite. And that's exactly what it is. Let me show you what we do here at TheoTrade. We create recipes in trading. As I was saying a moment ago, it's a pre-flight checklist. Okay? If you hop into an aircraft, which by the way, none of us are going to be doing for a while, but if you were hop into an aircraft, none of the pilots ever throw keys into a plane, okay, hit the throttle and they're off. Okay? They hop into the plane and they literally start going through detailed checklists. If you've never watched a pilot, I do. I flew all over the world for 15 years. Literally, I've flown all over the world. I've got almost 1 million miles. And when I say 1 million miles, I don't mean 1 million like airline miles. I actually have flown, okay, just under 1 million miles. I'm a crazy person that keeps track of everything and where I've gone. But at the pre-flight, and I've watched these pilots, they literally walk down the stairs. They're pulling on the engines. You know, they're looking at everything, okay? And then once they're in flight, they still continue to have checklists. If they have an emergency, they actually have details. This is what I do. This is how I handle it. Okay, everything. That's what TheoTrade, okay, has built, is recipes in trading. And I'll show you what that means. I'm like, trading is about answering the what ifs. It's not about, getting into strategy, getting out of strategy. It's the what ifs. What might be a good stock or ETF candidate for an in-out spread? What's the correct options expiration cycle to buy my in-out spread? How much capital do I commit to these in-out spreads? What strike price options do I buy and what do I sell? And growing a small account, what should my allocation be? We have those answers here at TheoTrade. We build recipes with definitive criteria, literally checklists for each strategy and each unique variable. The variables are what change everything. When I say the variables, that's answering your questions. What's the right probability? How many option contracts? When do I close the spread? What if the stock sells off big? What if the stock rallies massively? What's the correct return for the strategy? Can I fix a losing trade? It's the how, it's the when, it's the why, it's at what price, and it is just the very beginning of the many variables you'll face while buying an in-out spread. We build not only a checklist, okay, but it's actually a flow chart. What if the stock goes up? What if the stock goes down? What if the stock stays flat? What if we're approaching expiration? There's a dividend payable. There's earnings coming. Oh my! Think about all the variables are out there, and we've gone through them, okay, after years and years and years of fine-tuning this. Listen, you can read what a spread is. Right now, you can Google it because that's what everybody wants to do. They want instant coffee, instant tea. You can Google what an in-out spread is right now. Maybe you could even follow what I did. You might even know how to build a spread. What you don't know is the recipe. You don't know the recipe for success, and you need TheoTrade's recipe for success, which comes from 20 plus years of trading experience. That's me. I had access to client order flow for 15 years. Literally viewed and studied millions of trading accounts. Why did we do that? To get down to some of the finite details. There is so much covered in this in-out spread. Okay, when I say the finite details, you know what I learned from studying millions of accounts? People don't know what to do in options before expiration. People don't know what to do when dividends are coming. People have no idea what delta even is. They don't know how to structure the trade correctly. They don't know how to route the trade right. Listen, I ran education for 15 years at a firm with the largest options order flow in the industry. Okay, I can say bar none, right? We know what to look at getting into these trades, but more importantly, how to get out. What you'll find is criteria is your recipe for success. The following strategy, the in-out spread, and its corresponding criteria requires the utmost attention to detail. And we spent years fine-tuning this trade, okay, the setup and the criteria. And when we approach the section on criteria, you follow the steps to build the trade, okay? Our class, Guide to Small Account Growth with In-Out Spreads. The class itself is 4 hours. It's $497. It's a 4-hour course. It is available immediately. And we make this available immediately. First of all, the 4-hour class, we went out, we edited it, okay? We cleaned it up. We made it available immediately because this kind of volatility demands it, okay? You can go to the class slide deck. Again, it's a 4-hour course. And you're like, where do I watch this? Well, we have a website. We also have mobile sites where you can actually watch this on iOS, Android. You can watch it on your iPad, right? You can stream it at your leisure. It's 24/7 access. It's just like entering into like Netflix, streaming it. But with the class, there is a slide deck. And that slide deck includes entry and exit criteria. It's the checklist. That's available immediately for download. So when you go in there, before you even watch the class, you open up the slide deck. You can actually look through some of the criteria. You'll actually see like a Cliff Note version of it. Again, the class is available right now. And we do that because we want you to understand this is volatility. Get on board, understand the nuts and bolts behind it. The class is $497. As I said, here at TheoTrade, we also have mobile access. We actually have an app, a TheoTrade mobile app for iOS and Android. So if you're not necessarily available in front of your computer, you can watch it on your phone. All right, and we've actually blown up everything in the slide deck so you can actually see it, even on the smallest of phones. You can see it on there. You can even download it. You could play it technically from 30,000 feet, just like, again, you would in Netflix. Tonight, along with this course, we have a couple of special bonuses for you. Bear with me for a couple of moments because I don't want to just say, it's a class, and it's $497, okay? We're going to give you some bonuses, okay, that are really going to change the way that you not only feel about TheoTrade, but feel about this entire business. Before I get there to some of the bonuses, I want to detail some of the curriculum because it's important that you know what is in the small account growth with in-out spreads class. Like what is in this class? Well, this is the curriculum. Some of the key points that we're going to cover, okay, and have covered inside of this class. And again, I'm the trade instructor for it. It is a 4-hour class. You're going to learn to construct the in-out spreads. Easy to learn, easy to place. You're going to learn how to buy long duration options without paying more. So you're going to give yourself the gift of time. Number 3, how to use defined risk reward strategies so you never have to lose sleep over the positions again. We're going to define that risk. Number 4, in-out spreads are used in any market condition. I'm going to say this. They're used in any market condition or direction, but they're absolutely unequivocally the best in volatility. The more we move, the better probability you have of hitting the profitability of the in-out spread. Number 5, build your own in-out spread. So in the class, not only are we going to show you, this is an in-out spread, we're actually going to build one. And we're going to take you through detailed step-by-step entry and exit criteria. Number 6, in-out spreads easily managed with GTC orders. This is the part of the class we actually get to GTC. You're going to learn in-out spreads can be done with a trading account, okay, of $2,000. The trades can be done in retirement accounts, minimal options experience. Some people go, I don't have options approval. We'll get you options approval. Some people say, I have an IRA. I have a retirement account. You could do these in a retirement account and an IRA. You got smaller accounts looking for big upside potential? Great. If you're a big account, all right, fantastic. No problem. There's an entire area of this particular class that deals with capital allocation. Although we call this small account, the capital allocation, it teaches position sizing. Everything from a $2,000 account clear up, okay, to a few million. Position sizing techniques to grow your account. People follow the recipe in order to be able to build the trade. Now, this is where I said, again, the class itself is $497. Okay, I'm going to give you where you can enroll for it here momentarily. Before I do so, you want a bonus. Here at TheoTrade, and prior to TheoTrade, again, I ran the education division, I built the education division of Thinkorswim. I went on to run education at none other than, of course, TD Ameritrade. We had 7 million clients. And at my time, through all of that education, I've seen everything in terms of education in this industry. I know that some of you guys have been through classes before. By the way, how many of you that are tuning in tonight, literally you're tuning in tonight, how many of you have been to some type of class before? We've actually paid to go through a class before. Come on, admitting it's the first step. And the reason I ask that is because I want to change the way that people feel about education and the entire business. And when we built TheoTrade, and by the way, I exited TD Ameritrade and still have a great relationship, obviously, with TD Ameritrade. We're using their technology. We have a great marketing relationship with TD Ameritrade. Nevertheless, I exited TD Ameritrade in 2015. We launched TheoTrade, okay, just about a year later in early 2016. And we launched TheoTrade. We took several, okay, of the instructors that worked with me at TD Ameritrade. Well, they came with us to ultimately build TheoTrade, which I'll discuss here in a minute. But at my time and watching all of the other education companies and all the selling of this crap, listen, what I want you to understand about TheoTrade, we go beyond one class or one indicator. The stuff that we can't stand is, you're going to pay for an in-out spread class here today and it costs you $497. We don't do that. We don't just charge you $497 and kick you to the curb and say, here's one class. We get, okay, this business. If you want to be in this business, you need support. You want everything to trade. You want everything to invest. You want it at one place and you want it at one price. And I'm kind of poking fun at this, but if you've ever gone out and taken a class, they'll charge you $497 for a class. Then you got to buy an indicator. The indicator is going to cost you $1,000, but then you have to take a class to learn how to use the indicator. And then once you learn the class, do the indicator, then you have to take another class, okay, because you're more advanced at that point. This is all garbage. At TheoTrade, forget about it. We do everything. We do it better, and that's exactly what I'm going to show you in these bonuses. There are 3 bonuses that we're going to offer tonight. Bonus number 1, we're going to give you access immediately tonight to over 91 trading classes. You're like, why'd you guys do that? Because when we set out in building TheoTrade, okay, here's our model. We wanted to be the Netflix of this business. We wanted to provide you everything that we do at one price. Everything that we do. And that starts with classes. We don't feel that it's right that somebody goes out there and charges you, $500 a class, $500 a class, $500 a class. Off the bat tonight, we're going to give you 91 trading classes. Overwhelming? Sure, absolutely. I don't know, for $497. $497. You want to be overwhelmed or underwhelmed? You realize the guide to a small account growth with in-out spreads, that's archived immediately. Watch it tonight. It's $497. After you watch that one, binge watch the rest. Guide to Surviving and Thriving in Extreme Volatility. That's also a $497 class. It's included. The Volatility Back Spreads class. By the way, this was only done 3 weeks ago. This was done, okay, about 5 weeks ago. Growth, growing a small account through black book spreads. How to collect income being short. The next big short. Guide to selling high probability spreads. Iron condors for income. Selling premium, minimize your risk. Day trade NASDAQ futures. Covered calls. Essential skills. Top 10 skills for growing a small account. Pairs trading. This is just scraping the surface. I'll actually show you there are 91 full courses here at TheoTrade. There's nothing like this. We're literally from day one, okay, we will give you access to over $9,000 in classes alone. Okay. And by the way, it's at 91, okay, at 91 trading classes, it's worth well more now than $9,000. I just think that that's a nice clean number. You're like, hey, $100 for this, $100 for this. It's over $9,000 in classes alone, and we give you access to it immediately. Everybody likes a different genre of trading. I don't know. Some people came here tonight. You want to learn about in-out spreads, phenomenal. But after in-out spreads, you want some technical analysis, okay? We've got market technicians here, second to no one. In fact, here's the instructors here at TheoTrade, Jeff Bierman, okay? Everybody here. If you've ever been on the Thinkorswim trading application, you owe Jeff Bierman. You want to know why? That guy built half the studies on Thinkorswim. I know. He worked in my group, in the trader group. Okay. Jeff Bierman is also a professor of finance at Loyola in Chicago. So he moonlights with us right now at TheoTrade. He spends about 2 hours a day working at TheoTrade. He goes and teaches a couple of lectures right now over at Loyola, except he's teaching the lectures at Loyola on one computer and turning around and doing TheoTrade on the other. If you want to see Jeff at Loyola, he's $42,000 a year, okay, for a professor. Or you pay $497 and get every one of his courses. Okay. By the way, Jeff was also the former chief market technician for TD Ameritrade. It's a pretty highly coveted position. TD Ameritrade currently has 9,000 employees. Jeff was number one in terms of market technician. It's one of the first guys we actually pulled out of TD Ameritrade. Number two on the list, okay, Matt Williamson. He's our premium selling strategist. For those of you, if you want to be into a little bit more market neutral premium selling, Matt's your guy. Number three, Corey Rosenblum. Corey, I've known the guy for 20 years. He's our senior strategist. He's our resident swing trader. You want to get in, you want to get out over a course of a couple of days, Corey's the guy for you. Okay, number four on the list, Brandon Chapman. Brandon also worked with us at TD Ameritrade. He's a CMT, macroeconomics, technicals, and fundamentals. I want to give, Brandon one other area that I think that you should know about Brandon. Brandon worked in the education division of TD Ameritrade. And Brandon actually wrote the book for a course at TD Ameritrade that used to be sold for $24,000 for 18 months. I can't say the name of the course, but some of you took it, okay? It's $24,000 people used to pay, literally, okay, for an 18-month long trading course. Brandon wrote the book. He now works for us here, of course, at TheoTrade. He'll tell you firsthand what we do here at TheoTrade for $497 smokes what we used to do for $24,000 for 18 months. Just absolutely blows it away. Next on the list, Steve Slim Miller. It's a 43-year veteran, stock options and futures trader. I've known Slim since literally I am a kid. Last on the list, but definitely not least, is Tony Rago. This is our NASDAQ futures and intraday strategist. This is somebody that sits there all day long and trades with you. Literally all day, every day, he just trades back and forth, calling out different setups specific to the NASDAQ futures. Because again, every one of us has a different genre of trades. So when you guys look at this and you think, how could they have 91 classes? Yeah, I don't know, from 2016 to right now, okay? Given the number of instructors we have, and we're constantly adding new new instructors, new content here at TheoTrade, that's your first bonus. Again, access to 91 classes. Next on the list. You ready for another one? Everybody okay? Okay. By the way, John got it right. John was telling me, he's like, what class was that took 18 months for $24,000? You are right, sir. And that is exactly where Brandon Chapman is from. Okay. Next bonus on the list. We're going to give you an all-access TheoTrade VIP membership pass free. You're like, oh, what is that? Okay. As I said, when we set out to build TheoTrade, we wanted to give people access to everything. Okay. Let's just call it TheoTrade. It's the full Monty of trading. We're going to give you 3 months unlimited access to TheoStream. We have a live trading chat room. The trading chat room, it broadcasts live 6 hours per day. I know that not everybody could be in there 6 hours a day. We give it to you anyway. Okay. And most days, by the way, like tomorrow we broadcast for actually 7.5 hours. We do a happy hour on Wednesday night. Okay. We broadcast on average of 6 hours per day. That's live trading 6 hours a day. You want to sit there all day with us? Sit there all day with us. Okay. I'm in there a minimum. I do a minimum of an hour of this broadcast every single day. And we just rotate instructor after instructor after instructor after instructor. Everybody has their favorites. Our traders provide real trade ideas. We trade real-time market insights and analysis. We do text and push notification of the trade ideas, including in-out spreads. So if you don't know what to do, we'll text you. We'll do push notification. 5 distinct trading portfolios. So we actually have 5 unique trading portfolios. We have a duration portfolio, in-out spread. We have a black book portfolio, and it goes on, right? We have daily coaching sessions. Coaching sessions are typically done by Jeff Bierman. Want to know why? Because Jeff Bierman, happens to be a college professor. Who better than to continue your education than Jeff Bierman? Topic, stocks, options, futures, technical analysis. And this one, I put a huge amount of weight into this one. Our instructors will directly answer your trading questions via email. We don't hide behind any crap. You want to email me and say, should I do this in-out spread? We'll tell you. This is for 3 months, okay? It's access to $997 of support, trades, and insight. It's huge, okay? I'll tell you what, push everything aside. If you just had access to us by email, you think it's worth $497? I say that not facetiously. If you could have emailed me one time in the last 3 months, would it have saved you capital? Just ask yourself that question, because I'm going to tell you right now, I don't care if I got to be up till 3 in the morning answering emails. We answer hundreds of emails every single day. I might broadcast for an hour a day. I spend 4 to 5 hours a day cranking out emails, okay? Especially when we're in a volatile market. Again, it's $997 support trades and insight. That's your second bonus, okay? Included with the second bonus, we're going to give you access, okay, to 59 proprietary indicators and scans. Now, tonight, we're actually going to give you access to the auto expected move indicator. I'm going to give you that in just a moment. I'm actually going to give you a link to the auto expected move indicator. But at TheoTrade, we actually teach you how to do it. There's classes specifically on how to use the auto expected move. We also give you gravity points and RSI Laguerre. By the way, this is all part, okay, of TheoTrade, RSI Laguerre and Quantix and NQ levels and next generation squeeze indicator and complex position tracker, IV rank versus IV percentile, and TheoQuant and unusual put options activity and sizzle scan and SPX, okay? It's access to over $1,800, okay, in indicators and scans. We give it to you all. And by the way, each one of these often includes classes. And when we have an entire class, right, built around gravity points, an entire class, of course, multiple classes built around NQ levels and Quantix and cumulative indicators, SPX expected move, it's huge. If class is built around this stuff and we give you access to it, okay, that's 2 bonuses that we've given you. So again, we give you access to what? 91 classes. We give you access, okay, to our trading room, to live trades, to push notification, distinct portfolios. We're going to answer your emails. We're going to give you access to all the different indicators. This is bonus number 3. This one's unique tonight. Why? You need to know this. There's a live class coming. That live class is coming. It's May 28th. It's Thursday, May 28th, right? Just about 10 days from now. The class on Thursday, May 28th from 9 a.m. to 11 a.m. It's a 2-hour class. Now, this one may actually extend out to 3 hours. I will be the instructor. It's a survival guide to controlling your risk. And I'm going to detail exactly what that means. Okay, so we're going to do a live class. And I think it's the third bonus. It's a nice little kicker because you've got 3 months access into TheoTrade. I want you to know the next class, it's coming up. This is one you are not going to want to miss. The course will be archived immediately. Access or download capability on TheoTrade mobile for iOS and Android. So you can, if you miss it, because some people are like, I'm back to work, May 28th over here. It's this, it's that. Like, I get it. But it's going to be archived immediately. Literally, the second the class is over, you can watch it. This is one, when I say you cannot miss this class, what does the class cover? Survival guide to controlling your risk. Risk management, you're going to learn it's survival. Okay. Risk management will keep you alive in this business. You're going to learn the skills needed to survive markets, even when your positions are dead wrong. It's one of the keys to this, right? Discover how risk control can actually be the defining factor in your longer-term success in the marketplace. You're going to manage your capital like never before. You're actually going to manage your capital. It's going to be easier to manage your positions. And some people think, I don't even have positions on. Sooner or later, okay, you will. You're going to have techniques taught in this course. It's forever going to change the way that you approach markets because you're going to look at your capital and how you allocate. I don't care if you have a $2,000 account or $2 million account. Right or wrong with directional bias, the skills, okay, can guide you through volatile markets. And I stress this just time and time and time again, right? These are the skills, people, that you need in this business. And most people, they don't get to that level to where they're like, I put a trade on and I got beaten up and I don't like this or I don't like that. Listen, okay? The survival guide to controlling your risk. When I say, this is it. This is what you need, okay, to survive in the business. I'm not trying to be facetious in any way, again, shape or form, okay? Listen, you want to see how important this stuff is? Look, what our members are saying. This is actually Todd Summerall. Hey, Don. Don't know if you remember me, but I emailed you a few weeks ago and told you my delta, okay, was plus a couple thou or more. Basically, he's hugely bullish in the marketplace, right? So he emails me and he says, what? And I told him, smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you. For your information, before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances, okay, would have been a goner without your advice. You can use this if you want. Well, thank you, Todd, because I am. Thank you very much, Todd Summerall. And I threw this out here because what I talked about with Todd in the email is the basis of what I built this class on. The next one actually came from Chris. I've learned more in the past 4 weeks managing and defending my portfolios than I've learned in my entire trading life. Nothing I've learned would have been possible without having tuned into your teachings for the past 2 years. Also, my atomic hedge, it's one of the strategies we teach, it's one of the classes you have access to, took a large sting out of my long-term IRA destruction. You clearly don't have to be a teacher, but thank you for doing so. Stay safe. It's actually from Chris. And the last one I want to share with you actually comes from March 16th. The reason I brought this one up, you're like, yeah, that's a little bit dated. Do you guys remember? March 16th is pretty much the bottom in this marketplace. And this one comes from Brian. It says, Don, wow. I want to again say thank you for what you taught me in the last 2.5 years. Okay. I bought into what you taught about risk twist spreads and duration positions. And I started to trade options almost a year ago. I missed out on the last of the market move up. But at the moment, my IRA is up 14.8% for the year. What I've invested in TheoTrade has been so worth the money. Thank you, Brian. The reason I detailed that, this guy is up 14.8% in the worst market crash in recent history since the Depression. It was actually a worse crash than the Depression. And this guy's actually up 14% at that particular time. Listen, what we do at TheoTrade, it's everything. TheoTrade includes everything you need to invest and trade. We do classes, we do coaching, we do email access to the instructors and live trading chat room and live trades and indicators and scans and mobile access 24/7. It's everything that you're going to need in this business. Okay. And we stress that we really want to provide you everything you're going to need. We want to build. Okay. And TheoTrade, it's the Netflix for traders. Name a genre of trade. And we have it here at TheoTrade. You want to learn about intraday trading. You want to learn about day trading. You want to learn about swing trading. You name it. There's classes here at TheoTrade, and I'm going to show you just that. Tonight, total Theo, it's $297 for 3 months. That includes the high probability in-out spread class. By the way, as I detail some of this, you can go right now to enroll for this. Okay, go right here. All right, it's theotrade.com/I, N as in Nancy. theotrade.com/I, N as in Nancy. Tonight for $297. By the way, for $297, I want to make something really clear right off the bat because I'm going to get a million questions about this. So just bear with me for a second. Then I'm going to answer all the questions. And I know that I've gone over. And I apologize. I had some technical issues early on, but it's okay. It's $297. This is not a membership. It's for 3 months. It's not a membership. It's not an introductory price. It's none of that. Okay. You pay $297 here for 3 months. If you want to do it after the 3 months, pay another $297. This is a one-time charge. We do not do memberships because we know people are worried about that stuff. Pay $297 for 3 months. At the end of 3 months, if you want to do it again, you have to actually email us and say, I like this. I want to do it again. Okay. We now have just over 5,000 clientele on TheoTrade. We're constantly adding more people in here and constantly adding more instructors and more people that can obviously answer emails and trade-related questions. Again, what do you get for $297 for 3 months? You get everything. Everything we just discussed. The high probability in-out spread class. That archive is available immediately. Okay, it's ready to go. Tonight you can watch it. Then we give you access to over 91 trading classes, all available immediately. We're going to give you new monthly classes. Remember, the next class is coming up May 28th. All right? Survival guide to controlling that risk out there. We do a live trading chat room, 6 hours a day. We give you 59 proprietary indicators and scans. We do text and push notification, trade ideas, and 5 separate portfolios. We have daily coaching sessions with timely topics in stocks, options, and futures. And we'll actually answer all of your email questions. And again, I don't want to hide behind anything. People go, can I email you and ask you about specific trades? Bring it. Just bring it. I don't care. You want to ask us trading questions? Listen, most of us had brokerage licenses and so forth. We know this business. Okay. Email us. $297. If you emailed me one time, okay, in the next 3 months, it's worth the money. And we do this. Why? Listen, okay. This is something that we could only do online. We have over 5,000 clientele here at TheoTrade. And tonight, we're going to make this a completely riskless trade. TheoTrade, make it even easier. It's a riskless trade. It's everything you need to start trading from absolute novice to expert. Okay? We'll give you a money back guarantee tonight. And we do this because we want to make sure that every one of you enroll tonight, over the next 3 months, we want you to be satisfied. If you're not satisfied, and I'm just going to detail this really quick. If you're not satisfied, email us, support@TheoTrade.com. Give us the details of your trades, receive a full refund. We don't want anybody, okay, here at TheoTrade that is not completely and totally satisfied. By the way, we don't get into, people say, define satisfied. We don't define satisfied, okay? Why don't we define satisfied? For $297, it ain't worth our time. It's just not worth our time. If you're not satisfied, okay, we'll give you back your $297. Again, there's over 5,000, members here. We do have money back guarantee stipulations. By the way, our stipulations, we say this a little bit tongue in cheek. You have to do 10 trades using the in-out spread criteria. The reason I say this, you can't make up your own criteria and go, I lost money, I'm very unsatisfied. Okay, follow what we do over the next 3 months. We'll text out more than 10 trades in the next 3 months. The next thing, your initial account value has to be over $2,000. That's a must. That's not me. Okay, that's actually the Securities Exchange Commission. To trade option spreads, you have to have over $2,000 in the account. All right, that's one of the stipulations. It's not really our stipulation, but to trade spreads, you have to do that. Okay, the next one, you have to follow our criteria. I know I already said that above, but as I said, a little tongue in cheek over here. You have to follow our criteria. You can't make up your own crap. You follow our criteria, follow our trades. If you're not happy, get your $297 back. Oh, the other thing, you have to do trade. You really have to trade. You have to provide real account statements of trades. This ain't paper trading, people. Okay, all we're asking you to do, okay, is sit back, relax for the next 3 months, learn a little bit. If you're not satisfied, we'll give you your money back. All you have to do is email support@TheoTrade.com. Why did we make it a riskless trade? Because we only want people here, okay, that want to be here. Again, it's not a membership. You pay $297 for 3 months. If you don't love it, okay, fantastic. Like, we get it. We'll give you your $297 back. But if you do love it, we hope you come back. Okay, we hope you come back month after month and year after year. Okay, and again, that's how, of course, we build membership here. Listen, get into TheoTrade now. We'll work with you directly. 5,000 people. You're like, 7 instructors. No. We have many, many more people now. Okay, highly skilled traders that worked with us at TD Ameritrade, even in my prior trading career, that are all there to support you. Tonight, we have 50 spots on the TheoTrade riskless trade deal. The reason tonight we have 50 spots, okay, it's a matter of size. Okay? We have to go through and reconcile your trades. We're giving you unlimited email mentoring. You want to email me here and there and everywhere, that's fine. But we give you only 50 spots on the riskless deal. And again, send us your trades. We're telling you to send us your trades. That's why we're limiting to 50 spots, because we realize that we can't look, okay, at, tonight there's 1,000 people on there. We can't look at 1,000 different people's trades. We can definitely detail, though, 50 people. We'll give you 50 spots on the riskless deal. Okay, we'll work with you directly. $297 riskless offer has never been available before with the in-out spreads. In addition, you have the survival guide to controlling your risk. I'm going to tell you right now, the Survival Guide to Controlling Your Risk could be one of the most valuable courses you've ever taken, period. If you've never taken a course, it's one of the most valuable courses we're ever going to offer here at TheoTrade. Again, I'm going to answer some questions here momentarily. I also want to bring you directly to the site. Again, this is TheoTrade.com/I, N as in Nancy. Okay. This is everything you get access today for $297. First of all, it's the guide to small account growth with in-out spreads. Okay. The first bonus, all access pass. We've got live trading, chat room 6 hours a day. Everything's archived. By the way, if you can't attend 6 hours a day, you could watch 1 hour a day. That's archived, and you can actually watch it sped up. People are like, wait, what? Okay. On our mobile application, you can go like 1.5 times the speed. You can go 2x the speed. I already speak pretty quick, but 2 times the speed. You can actually watch an hour in basically 30 minutes. We do text and push notification of trade ideas. So if you can't necessarily watch, you're going to get push notifications. You're going to get text. Again, we do this because we have a mobile application. We'll give you the trading indicators, the daily coaching sessions. Okay. Also give you access to, it's now 91 courses. There are 91 courses now. There's day trading and swing trading and technical trading and beginner trading and advanced, okay, new monthly classes. Again, before I go any further, okay, I actually want to take you to TheoTrade. I just want to take you over to TheoTrade for a second because you're like, oh, there's a lot of classes, right? Well, first, okay, again, I think it's important that we just literally, when I say take you over to TheoTrade, come here. Okay. It doesn't like me. It doesn't like me. Boom. There we go. This is TheoTrade. So this is what our chat room happens to look like. All right. So this is where we broadcast every day. Down below, okay, down below over here happens to be, well, all of our clientele talking to one another. Won't be too intimidated, but there's thousands of people in here every single day. When we broadcast and we start pretty much 10 minutes before the market open, the screen will actually come to life. Okay, meaning that the screen will start to broadcast. Now, people always ask about, I'm brand new. There's a lot of classes, a lot going on. We have what we call a Start Here menu. If you're an absolute novice, Options 101, Options 201. Okay, and I'm going to come back to this in just a minute. Okay, we have, again, all of the classes broken down into genres of trade. We're going to come back to that here momentarily. Again, it's TheoTrade.com/IN. Before I go any further, I want everybody to follow me right now to this page. I'm going to say everybody, TheoTrade.com/IN. Follow me, okay, to this link for the auto expected move indicator. As I told you guys early today, and again, I'll throw that up here. It's TheoTrade.com/IN. And as I told you guys a little bit earlier tonight, here happens to be none other than that particular page. Okay, this is TheoTrade.com/IN. And it's the guide to small account growth, okay, with in-out spreads. There are 50 riskless spots left. And I stress, the riskless portion of it, we do this to literally do that, to make it a riskless deal for you. We want everybody, okay, to be satisfied, to be happy with what we do here at TheoTrade. And we think risking $297 on that is worth it, okay? Now, everything that you're going to get in TheoTrade is detailed in here. But tonight, there's a third bonus, and the third bonus includes the emergency. It's a survival guide to controlling your risk. It's a completely separate class. It's going to happen during the trading day, May 28th, 10 a.m., 12 p.m., okay? That's Eastern Standard Time, 9 a.m. to 11 a.m. Central. It's probably going to run closer to 3 hours. Again, I'm being a little conservative with the time over here. I'm going to get a little wild during it and probably go upwards of 3 hours of that particular class. Enrolling tonight, click directly here on Add to Cart. As you click Add to Cart, a new page will populate. The reason I'm taking you in here, I want you to recognize, okay, this is not a membership. It is a one-time charge of $297. And I always detail that, okay, because that is it. There's no reoccurring, billing of any kind here at TheoTrade. We drop that because you know what? We don't like it. And we know you don't like it. And that's why we do it. So for the most part, come right in here to TheoTrade.com/IN. If you need to get a hold of us right now, okay, the easiest way, we are here. You can come in here and actually chat directly with us, okay, if you need a little bit of support in here. Now, on the bottom of this page, on the very bottom of this page, okay, scroll down, it's an auto expected move indicator. Okay, the auto expected move indicator, the download is directly towards the bottom here. For those of you that are enrolling, okay, tonight for TheoTrade, you don't have to go to the bottom of the screen. We'll give it to you regardless. It's part of TheoTrade. Now, I'm going to answer a couple of questions, okay? Again, I want to take you guys over to TheoTrade one more time to make sure that everybody, okay, understands what the site looks like, where to go on the site. I think the first thing that I really want to get to, okay, as I said, this is the Start Here menu, okay? Where do you go from there? So you start here. Everything on TheoTrade is from the basics to the extreme. So the Start Here menu, even if you're extraordinarily experienced, watch something like the Order Execution class, okay? That class, we talk about it's $297 for 3 months. That class alone is going to save you more than $297. I just can't stress that enough because just the Order Execution class alone, okay, is beyond worth the value of it. That's one little nuance of what's in this site. If you want to see what the classes look like, okay, people go, well, show me some of the classes. First of all, this is the classes archive, okay? As you scroll down, option strategies, option newbies, technical analysis, day trading classes, stock classes, futures classes, hedging strategies, trend trading, pairs trading, mindset, okay? Again, each one of these classes, you're like, well, let me see them. let's click into option strategies, because that's kind of my area. That's my genre, right? Here, sell premium, minimize risk. Okay, essential skills for consistent trading. Weekly diagonal spreads for consistent income. Beginner's guide to weekly returns. The next big short. This was huge. The risk twist. How to collect income being short. Strategy week. Fruit fly for consistent income. Selling options for a living. Okay. And it just goes on and on. Volatility crash course, back spreads, guide to surviving and thriving in extreme volatility. All of these were just added the last couple of weeks since we actually hit the patch of corona volatility, if you will. That are some of the genres. And if you want to see what a class looks like, a moment ago, what are we talking about? We're talking about the in-out spreads class. Here, there's the in-out spreads class. Okay, we can click directly on it. What does the class look like? Click here to download the slide deck. We're off and running, people. This one's playing, okay? These are what the classes look like. They're actually broken down, okay? Criteria, checklist, everything, all right, is in here. It's everything you're going to need. Now, the last thing I want to show you on the site that'll blow you away, we actually built a search engine. You name like any genre of trading, okay? There's pairs trading, any genre of trading. Type it in there, or any question in trading. You could type it in there, and it's actually going to bring you to specific, okay, coaching sessions. February 6th. Pairs trading revisited, pairs trading 101, another coaching session on pairs trading. It just goes on and on. There's so much in here. And again, we'd rather, for $297, keep you a little overwhelmed than underwhelmed. Can you watch all of this in 3 months? Maybe not, but you're going to make a valiant effort to do so. All right. So it's TheoTrade.com/IN. Now, as I promised, okay, I am going to answer questions right now. Again, there was somebody else that it's TheoTrade.com/I, N as in Nancy. I'm going to answer some general questions. Then I'm actually going to loop back around, okay, and make sure that everybody gets their questions answered, okay. As you guys are enrolling, if you have questions, fire them in. We've got JP on, we've got Matt on, we've got Corey on. They're answering the questions, okay, in the room right now. So with that, I get this question all the time. Like, what do you need to get started here? So in the first question tonight, and again, I want to generalize, and then we're actually going to get right down to the nitty gritty, some of the nuanced questions. You need a laptop and internet connection. By the way, I'll tell you what, you don't even need a laptop anymore. You could use an iPad, Android, a tablet. We have everything that you're going to need to get started. I mean, we even give you the brokerages. We'll tell you which brokerages are decent, which brokerages are bad. Hey, listen, we have a marketing agreement with many of the largest brokerages. Okay. In fact, we have a marketing agreement with all of the largest brokerages right now. And that is, we can give you all the details. Okay. Next, this is not a membership. I always detail that it is not a membership. We're not going to auto renew you or bill you again. It's $297. Love it or leave it. Okay. We do that because we want to do what's right. I mean, listen, we built this business to do one thing, to be that Netflix for traders. Number 3, TheoTrade, we archive everything. Everything. Every word spoken in 6 hours a day, every class, every coaching session, okay, every happy hour, okay? Listen, everything is archived. So if you can't watch live, we're actually going to get you on the archives. Number 4, we give you access to our mobile application, where you can download the archives and view at your leisure. So if you are on an aircraft, nobody's going to be doing that, but if you are on an aircraft, you can actually watch it at 30,000 feet. Number 5, email us anytime, and you're going to receive a response within 24 hours. Okay? Don't email us with 5 minutes to go to the close on an expiration Friday. You're like, I'm freaking out. Got to give us 24 hours. Okay? But that includes trade-related questions. If you're in a bind, give us 24 hours. We'll get you out of that bind. Okay? If we can't get you out of the bind, people are going to email me sometimes and be like, oh, yeah, you're screwed. But this is the best course of action you can take. This is trading. This is real. Okay? This is, as I said, this is the full Monty. Okay? Number 6, you're going to gain access to every course that we've done in the previous 4 years, classes, coaching, live trading sessions. All the archives, as I showed you, were searchable. Name a trading topic. We have an archive on it. Okay? Number 7, all the trades that we discussed today can be done inside of an IRA. In fact, I trade here at TheoTrade day to day in my retirement account. And I do that because I want to make sure that it's plausible that everything that we do here can be done in a retirement account. That's important to me. Okay. I'm of the age that I'm now trading in my retirement account. And again, I don't, to help take a company public, I don't necessarily need the income. So I've been trading in my retirement account now for the past 3 years. So you can also do this in an account with as little as $2,000 in the account. Number 8, we'll help you get approved for options trading at several major brokerage firms. We have obviously, TD Ameritrade, E-Trade, okay, Tasty, all of them we have relationships with. If you have a problem with a brokerage firm, let us know. By the way, if you're in Canada, let us know. Okay, remember, okay, we have 30 riskless spots available. Listen, get results, take action. Okay, enroll for TheoTrade now. By the way, we actually upped this tonight to 50 riskless spots, and we upped it to 50 riskless spots because we just added more email support team to TheoTrade. All right, enroll now. There's absolutely no risk to you. Now I'm going to jump in here and I'm going to answer some more generalized questions here momentarily. I also want you to see what our members are saying. By the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach. And I'm sure I'm not the only one. That's actually from David. I like this one too. I'm very impressed. This is one from Facebook a while back. I'm very impressed with TheoTrade. I've studied under stock coaches, various trading intellects, okay, and different trading plans. I've not come across anything as good as what I'm seeing here. The people at TheoTrade are very helpful and extremely knowledgeable. I'm looking forward to this association for years to come. So with that, I'm actually going to throw up once again the main address. It's theotrade.com/IM. And I also, as I threw up a bunch of questions in here, I want to answer some of the questions directly. One of the first things I also want to do, I want to thank those that are enrolling. Again, there are 50 riskless spots available that are filling up rather quickly. Ramphis R from Virginia. So by the way, this is everybody that is hopping in there right now. I just wanted to thank you. James K from Texas, Jim D from Alabama, Ronaldo R from Texas, Donald M from Kentucky, Jason F from California, JLW from Colorado, Talseem, hopefully I didn't butcher that, A from Washington, Vivek S from California, Norman L from New York, Greg H from Idaho, Michael J from Texas, Milton S from New Jersey, John S from Pennsylvania, Chris G from Wisconsin. There's a bunch more right now. Oh, wait a minute. I got to take a breath. Let me actually come back to some of the questions. All right. Okay. Somebody was asking, is it true if it's range bound, you don't make any money? Absolutely not. So this is a question that actually came in from Nermit. If we're range bound, we can actually flip, of course, strategy. You flip strategy, and that's not a severe issue if markets become range bound for a substantial period of time. So I don't necessarily believe that a range bound marketplace is going to prohibit you. Okay. Okay. Oh, Mike was saying, does this strategy work with wider spreads? So Mike, what you're kind of asking, should I do a $2 wide spread, a $5 wide spread, a $10 wide spread? The answer is, Mike, yes. However, in the course, the criteria is going to actually define the width of the spread dependent upon volatility and stock price. Okay, so Mike, it's actually an excellent question. Ram is asking, this is actually the last question that just came in, are the good scans available? Okay, absolutely. In fact, the course, the in-out spread course, there's an entire section in the course that details a very specific scan and setup. All right. The next question, somebody said, what's the normal time for holding the strategy? That one I'm not giving you because that's actually part of the criteria. Come on, you got to save certain things for the class, right? So, by the way, that is the right question to ask. You know, you're hitting on a soft spot. No, the normal time for holding the strategy, well, that's exactly the key to the strategy, is you have to know the time frame, and that's what we spent literally, okay, thousands of hours data mining to figure out. Do I do this for 3 weeks? Do I do this for 6 weeks? Do I do this for 2 months? Do you have any idea how many trades and how many blown trades I had to have, to finite and to tune into that? All right. John was saying, how do you know whether to use calls or puts? That's in large part also covered in the criteria. But it's going to be bullish or bearish. And of course, you're going to ask me, how do you know if you're bullish or bearish? We are also going to cover that in quite some detail in this class. Okay. There was another question. Is this similar to a covered call? Absolutely unequivocally no. It is not similar to a covered call. But for those of you that speak geek, this is a synthetic collar. So you could actually construe it to a stock trade. It is a synthetic collar. Okay. By the way, before I go any further, I wanted to detail we had 50 riskless spots. There's a bunch more people that just enrolled. Milton S. from New York, JW from Florida, Rick K. from Montana, Thomas M. from Alabama, Pillar A. from California, Mark G. from Georgia, Miles P. from Texas, Robert M. from Louisiana, Charles C. from North Carolina, and I apologize if I am butchering any names out there. By the way, again, it's theotrade.com/IN. Okay, next question comes in here, and this is actually one of my favorite topics, so I love you for asking this. It said, any courses on portfolio hedging? Sir, there's not just courses on portfolio hedging. Okay, that's my life. Okay, that's the lifeblood of Don. If there's one thing that I love to do, okay, it's portfolio hedging. And when people are like, what do you mean portfolio hedging? You got a stock portfolio. Okay, you got a stock portfolio and you're not necessarily sure, okay, if this marketplace is going to continue up. So what do? We have an entire genre, okay, an area for hedging strategies. Look at this. Survive the extreme volatility, okay? This is actually the risk twist spread, beginner's guide to hedging and capital allocation, reducing risk and minimizing. This is the atomic hedge, okay? That's my lifeblood. I'm serious about hedging. You need a hedge, I don't care, email me. I don't care what the portfolio is, email me, okay? I will get you hedged. But which classes are best for growing small accounts in a volatile market? Jay asks a question that comes up all the time. One of the first emails I get from most newer members here at TheoTrade. Where do I start? In-out spreads. There's no question, in-out spreads. This is what you want to do in volatility. From there, we'll work forward to like duration portfolio. Okay. From there, we actually work into like back ratios are hot right now. Ratio, back spreads, back ratio, like what it's a variation of it, but it's actually called like a volatility back spread, which we just recently did a course on. They are hot. That's actually how I hit it out of the park. Okay. Again and again. The bonus class though, that I'm doing on May 28th, I want to hit upon that again. You got to have the skill, okay, to control the risk, to be able to do things like back spreads. You have to have a knowledge of how to look at your portfolio holistically. And some people go, I don't even have a portfolio. You're right, but everybody sooner or later does. And when you do, we're actually going to teach you how to mitigate some of the risk on there. All right. By the way, again, thank you. Keith P. from California, Dennis H. from Alaska. By the way, thank you for tuning in from Alaska, and a couple of Aussies in here. Richard R. from New York, Cheryl R. from Texas, Claire T. from California, Ivel G. from Ohio. Thank you. And by the way, we're getting fairly close to the 50 riskless spots on here. I'm going to answer a couple of more questions and then wrap things up. All right. Okay, I like this one because this one's actually a really challenging question. It says, not sure I understand how to make such huge profit if you limit risk, okay? You don't limit the max profit, ? You're absolutely unequivocally, okay? Not only are you limiting risk, you are, in most cases, limiting what you can make. What you're going to learn about this business, it's about consistency. It's not about the grand slam home run, okay? However, we have a number of what we kind of call outlier strategies that are, if you know you're that person that just you're going out there and you want to risk very minimal to make very large returns, we have strategies along that. But what most people will find, okay, you got to get into a niche and you want to place just a handful of trades every couple of months, and you just start going to chip away at the marketplace, get a feel for it, and that's kind of what the in-out spreads do. From there, that's when you start getting into volatility back spreads. That's when you can learn a little bit about risk twist spreads or VIX volatility spreads. We have courses on all of it. And again, you get those courses from day one, so it's not like you're going to have to jump out there and take a tremendous amount more risk here at TheoTrade. Listen, I think I got everybody's questions answered. I've gone obviously way over in time, and I hope you guys appreciate. Again, listen, we're all I wouldn't say quarantined, but we don't have a lot of places to go right now. I have 3 kids to help take care of. Nevertheless, I like doing this stuff. I'm actually going to be live first thing in the morning. So in the morning, we start at 6:22 Pacific. That's 9:22 Eastern Time. That's actually when we start TheoTrade every single morning. Okay, we'll start precisely at that particular time. By the way, we're almost completely filled now. It's Robert S. from Pennsylvania, Ira K. from New Jersey, Charles W. from Illinois. I'm not sure we hit the 50. I'm trying to count up at the exact same time. We're like basically almost at the 50 riskless spots right now. Again, it's theotrade.com/IM. As I was saying, I'm going to start first thing in the morning. It's a Wednesday. We have a completely packed schedule at TheoTrade. We have 6 hours of broadcast during the day. Then we're actually going to have a happy hour. That's going to be at 5 p.m. Pacific tomorrow night. We're going to have Matt Williamson, who's our kind of a market neutral specialist, on the happy hour. Listen, I want to thank everybody for joining us tonight. I apologize that I went over, but at the same time, no apology. Okay, this is trading. This is volatility. This is what we live for, people. Again, thanks everybody. This is Don Kaufman here from TheoTrade. Hit us anytime. Support at theotrade.com. Have a wonderful evening, everybody. Bye-bye.